Well, good afternoon, everybody. This is Dennis Wilburn with the Active Trend Traders. Welcome to How to Make Money Trading Stocks and ETFs. I want to remind everybody that all the materials we do present is for training purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. Here's a little bit about myself. Joining us from Zurich, Switzerland is Michael Bishop. How are you this evening for you, Michael?
Yeah.
How are you?
It is.
Yeah.
And I just kind of survived a thunderstorm. There were some flashes and heavy rain.
And so, yeah, we, gosh, our weather, well, since we moved back to Hawaii, our weather here is, of course, kind of constant. It's like, gets to be about 65 at night, 70 degrees, 65 to 70 in the day, and in the nighttime, up to about 90 in the daytime. And then the trade winds start blowing in the afternoon. So it's a great, I love living back in our home here in Hawaii. Anyway, I want to welcome everybody. Just always remember, expectations must be confirmed by price action to prove valid. Michael and I were having a little bit of discussion about in the current market condition, is it a buy the dip type of market condition, or is it sell the rally kind of market condition? And Michael, you said that it was to about 50 out of 55% of the traders who were doing the survey were saying it's time to sell the rallies.
45. So that was the majority. The little majority is now bearish.
So okay, what's our objective for this session is basically timely, actionable intel review at the end of the week. We'll cover the market review. We'll look a little bit about a couple of stocks, a couple of ETFs, and then look to see what else is coming. I am putting together a training session that is going to be talking about, is there a time, is there an appropriate time when it is when the probabilities are such in your side that you can place a larger, go into the market on a larger scale, maybe go in on a full margin type of account, all that kind of stuff, where the position will be where you will either lose a little or gain a lot. I'm pulling that strategy together. I've been working in concert with Mike Traeger in Dallas on that. And so I'm really looking forward to it. I've got some, it's all based on the active trend trading system, but there's certain times, there's certain points on a chart where the chart is just screaming at us, make a decision, take action. And as Mike, basically the way he trades is he pushes almost all in when he gets his signal, and he knows that basically he's either going to make a lot or he will lose a little. In other words, the probabilities are highly in his side. But that's what I'm working on right now. I will hope to be offering that. I don't know if it's going to be for pay type of a training session for active trend trading members, the premium members, but I may open that up and let other people who are not premium members basically do the one-time subscription to that. Probably looking about a 2 to 3 4-hour training session, probably do it on one of the weekends in the near future. So let's take a look at the S&P. What is the S&P telling us? Well, a couple of things, guys. I want to go over here and I want to do this. This is called a Fibonacci retracement, and I want to take it up I want to take basically from here down to here, back up to this level, and isn't that kind of interesting as we look at this is the S&P, where we've got some symmetry of move, and it basically came down, went up, made a lower high, and then has dropped and achieved 100% of its drop as of today on the S&P. Now, oftentimes this will extend and go further than that, but somewhere between the 100 and the 1236 retracement is where you would expect some kind of a turnaround. I find it very interesting on the S&P that the 100-day moving average is right there in between the two levels of Fibonacci support. So what's that telling us moving forward? Let me remove that drawing. Is that we basically are getting a support bounce, but it's not, what I'm paying attention to towards the close of the day is, am I getting a reversal candle along with a positive divergence on the TSI? And we're not getting positive divergence on the momentum, and we're getting a two-line cross down here, our cluster down here on the market forecast, which oftentimes leads to at least a bounce in the interim. Now, a lot of people, to answer the question about, is it do we sell the rallies and buy the dips, which do you do? Buy the dips or sell the rallies? And as we see right now, a lot of traders will basically go, if I drop below the 20-day moving average and the 50-day moving average on a significant down day like we had back on, let's see, Thursday of last week, then that puts us in a condition where we should look at selling the rallies. So we do get a nice little rally back up slightly above the 28-day moving average. And then yesterday we get a significant reversal, dropping down through the 8 to 20, the past breakout supports at the 2453 level, moving all the way back down to this trend line. What makes this trend line so significant? Well, going to power through this because we don't have a lot of time to spend on it. But what makes this trend line so significant is that it basically connects the bottom back here in 2016, and that trend line has been in effect since about February 2006. That's a 2-year worth of trend line. It is in the process of potentially being broken or at least pierced today. As you can see, the trend line, the moving averages are being hammered over. And that's often the way a topping action kind of works. I can look at it kind of like being a jackhammer, if you will. The first time it hits it, it tends to bounce and recover. The second time it hits it, it tends to bend the moving averages over. And then a little bit more. The third time, same thing, goes up, hits it, and we'll notice towards, as we move along in the topping type action, the moving averages become less of a level of support and oftentimes more a level of resistance, dynamic resistance, if you will, that you need to be paying attention to. So kind of interesting there. We still have to be aware, positive divergence, but daily, weekly chart pointing down, momentum pointing down, momentum. However, oftentimes these two-line clusters on the market forecast can lead to a bounce, and then each trader has to determine on their own, is it a tradable bounce? If we bounced here, where's it likely to go? Well, probably back up to this trend line that covers this top and this top, and or the moving averages. So it could bounce all the way back up, I think, to the breakup area, and then potentially roll back over. Again, what do we know about seasonality of the markets? We know, one, August tends to be historically the most volatile month of the year, followed quickly by September, which it tends to be historically the worst performing month of the year. And so in a way, I'm excited about what we're seeing because it fits with seasonality, which should bring us into the October timeframe with an anticipation of a bounce moving into the end of the year. So, Michael, anything here on the S&P you want to highlight for folks?
No, I totally agree. I mean, it's really an exciting range, and I wouldn't kind of want to change the sides too quickly.
Yeah.
But yeah, I mean, if you take a little bit the fundamental picture, then I mean, China looks really strong.
Yeah.
And also the Chinese tech stocks. And yeah, and I think the SPX downturn is a lot influenced by these big industry titles like Deere today was a disaster, the earnings.
Yeah.
Caterpillar I haven't followed in the last days, but these kind of stocks
are getting, yeah, they're getting their getting their hearts ripped out. So yeah, and one of the other things to just be paying attention to, folks, is, you know, what makes this downturn different than the ones in the past? Well, it's these two big sell-off days here, larger sell-off days than we've had for quite some time, and these tend to do some internal damage to the market. So moving right along, got a lot more stuff to cover real quick, and I'm running out of time. Okay, here we go. So now I didn't push the good NASDAQ Go button. Okay, NASDAQ Go button. For a potential bounce, NASDAQ looks a little bit stronger for a potential bounce up, getting a little bit of a spinning top doji, which is also a bullish harami on this large candle here. So, and you know, could we get a rebound back up? Sure. Draw a line across these tops in your study this weekend. I'm looking forward. I am going to be making a presentation to a group over in Honolulu this weekend, run by a real nice lady named Lenny. And so I'm looking forward to that. We're going to be talking about moving averages and what they tell us and all that kind of stuff. But as I see right now, positive divergence, that's good. A little bit of positive divergence on a weekly chart, and so it's around an area where it could potentially bounce, where it's found support before. But what's its upside potential or expectation is clearly maybe back into the moving averages. The steeper the 820 become to the downside, the more those function as a level of resistance. So that's what I'm seeing on NASDAQ. Now, RET's putting in a very interesting pattern. Oh, I got just too many drawings on that. Let's get rid of some of these drawings, guys. Clear the drawings. Clear the deck. There we go. Okay. The Russell has fallen down below the 200-day moving average. Really interesting. It has been in the sell-off mode. Just bam, wham, wham, wham. It is now down in a longer-term support level, is identified by these long-tailed candles. And so we've got a couple of areas to keep our eye on with the Russell as we move forward. One, let's go to the very tip-top bottom of this, down at these two candlesticks right there. And then we also have up a little bit higher in this area where the bottom is there, which correspond there. So there is a support zone. Now, oftentimes a entity will come down and reach out towards the support zone and then rebound. If the Russell finishes where it's at right now, we will have a hammer at a support level or close to it with a positive divergence. Would we want to nibble a little bit on like IWM or TNA on that? Maybe. One can always wait for a confirmation. What would be our expectations on that? Well, the expectations so far, the 20-day moving average has been acting as good resistance. So if this bounced and ran to the 20, let's say the 20 is about here, it's about a 2% gain. So equate that on a 3-time leverage, you're looking at about 6-7% to the upside with the leverage ETF. So, Michael, that's what I've got on the indexes. I'm not in a hurry to jump into any trade, but I am paying attention to, we're getting a little bit of, I wanted this, this positive divergence to happen. Now, will this low hold? That's my question. And we don't know until after the fact.
Yeah, I mean, what I do is, as volatility is now really high, send sell puts really out of the money. So 30, better 20 or 10, even 15 or 10 deltas.
Oh, okay. Okay.
So I have a lot of room to adjust to even short the market if the prices go down significantly, and on a short upswing, I will close all the puts immediately, you could say.
Okay. Yeah. So, yep. That I like. I trade my options just a little bit different than you. I like to trade mine more directionally, so I'll be closer to in the money. But that's again just a style that we both enjoy and do very well at. So let's get back to the presentation. I'm going to come back to this. So here is an entity that we have been tracking. Okay, this is a percentage of stocks above their 20-day moving average as of the 18th. As we can see, we got our first trigger on the active early warning alerts last week, last Friday, in fact, on Thursday and Friday. Well, we get a refresh of that today. Mike Traeger and I really want to see this, penetrate down here, 20, 15, 10, get it down real low, because that tends to lead to a spring load up to the up position. Then we apply our other, some of our other proprietary specs that we look at in the early warning alerts, but we're getting very close to a potential. So this hasn't changed from last week. Basically, we have stocks and ETFs, hair trigger profit taking. In other words, any type of hiccup, and people are in a profit taking mode. We saw Tesla get hit this week. We saw NVDA get hit this week. Now, we know that these have been strong in the past, so they may provide, find that level of support. Once they seek out that level of support, start looking for some positive divergence and some reversal signals to jump back in. Momo Cruise, kind of an interesting, take a look at that chart real quick. Nugget, do we have more upside? Wait for a pullback into the 820 to take a bounce for a Nugget, especially if Nugget can run between now and the end of September. That may give us a really good bounce in Nugget. IWM-TNA bounce, and then also QQQ or TQQ bounce. We shall see. Real quick, identify the trend, the reality of trend trading. If the mechanical side of your trading is not working, check the mental, physical, and spiritual side. Here's where we're sitting with the what we're doing so far this year. Very pleased. Each one of the strategy is actually doing better than it did last year, so I'm good with that. Seasonality is something I'm keeping my eye on. The regular year, the S&P tends to run sideways. In a post-election year, the S&P tends to roll over and sink into the last part of September into October. So that's the pullback that we're looking for. As you can see, back up in the normal year, from September 1st to the end of September, it tends to drop about 1%, maybe a little bit over 1%, then drive sideways until the end of October, then go into a big run. That's what we're looking at for S&P. Hey, I want to remind everybody that normally I'm having a good through the end of August offer where the 40% savings on a regular or a premium membership. Regularly $74.99 for $44.99. And remember, if you become a member of the active trend trading system, the prices of your membership never go up as long as you keep an active membership. So I just want to remind everybody, hey, I want to take a look at two charts. of interest, and then I will sign out for. Okay, let's take a real quick look at Momo. Okay, Momo's got earnings on Tuesday before the market closes. And so, do we want to jump on a trade on Momo right now? Yeah, probably not, but I want to be paying attention to it because it's had a really nice run from 15 up to, this is about 120+% move. It has the potential of doing that again. It needs to get broken up above the 46 level, but just keep it on your mind. I think Momo is one of those Chinese stocks, isn't it, Michael?
I don't know.
Okay. And then Cruise. Cruise has been getting whacked here of late, driving it back down into a former support zone between 52 and 55. It is searching for a bottom. Now, I don't usually go searching, looking for, dead dogs or that have already been slaughtered to jump on a position on that. But this has been on past IBD 50 list, and so it has been in the past been a really significant good growth stock, and it's just showing some indication that its momentum may want to turn around. So keep your eyeball on Cruise. And then I think we were talking about NVDA. Just keep an eye on NVDA also. Doing a real nice job. Nice little pullback into the 50-day moving average, still above the 50, but it's moving down below the 820. That's about ready to give us a negative cross. And so is this one of those also where, don't buy the dips until it proves itself, and I think that is, or until it gets way, way, way back down here along the 50-day moving average. Tesla really quick. Tesla, same type of thing. And Tesla is searching for the 50. It is basically, broken down. It's basically penetrated this breakout level at 347 and looks like it's trying to give us a nice little rebound. We shall see. We want to wait for the TSI to kind of reverse back up. We are getting an indication off of the market forecast that we may be in turn for a bounce, but again, we can draw the line across the top here also and just say, okay, that's where, if it's going to move up, it'll probably move up to that level or stay inside the moving averages. So with that, Michael, you got anything else?
MU, that's Micron, has a very similar pattern than Cirrus, and I showed it today.
Okay. MU. Okay.
I mean, there are a lot of kind of this second line technology stocks that look very vulnerable.
Yeah.
Or Citrix is another one on my short list.
Yeah, and it's a very important point I would point out to everybody. Michael waited till it got up back into a level of strong resistance, and then he went with his short because he knows if it's not going to work, he will know very quickly that he can bop out of his short trade if it runs back up above the $30.88 or $31 level for a stop out. So all right, let me go. Cool. What have I done with the slides? There they are. So anyway, hey, if you want to follow us, you can follow us on Facebook, activetrendtrading.com. Twitter, I post some information on Twitter occasionally, and so you can join us there along with the YouTube channel, which is Market Tech Talk. And if you're a premium member, get ready because we are going to be having the final hour coming up at 12 noon Pacific time. So with that, I'll bid everybody adieu. God bless. Barb, it's great to see you or see your name on the list. Michelle and I were just talking about how fun it was to be on vacation up there to see you guys last year, and would like to do that again soon, or let you guys come to Hawaii. And so, okay, awesome. Hey, have a great afternoon. Michael, have a great evening and a great weekend.
You too. Thank you for having me. Bye. Nice weekend.
Bye-bye. God bless everybody.